But right now, a lot of people are saying that FuboTv could be the Netflix of live sports, and they could be even more than that because of all of the opportunities with sports betting. Yeah, record-breaking day for Coinbase. I mean, had over $100 billion market cap during the day. It was just a record-breaking market debut for any company really ever. But welcome back to my show. We go live every day, 9 a.m., talking about the stock market, financial news, and unless you've been living under a rock, I mean, you probably saw Coinbase's IPO, and ETF investors are actually very, very excited about Coinbase and crypto investing in general, and they came out and said the other day on CNBC that Coinbase listing will cause an explosion in crypto investing. And this is for a couple of different reasons. So, first of all, Coinbase had its market debut, record-breaking. Its IPO price was at $250 per share, but it closed at $328, and within an hour of opening it was over $400 a share. So the IPO price was $250. Within about an hour it was over $400 per share. Finished off the day around $330. But either way, this is putting pretty close to a $100 billion market cap, and ETF investors are saying there's really no signs of this slowing down anytime soon, and this is for a couple of different reasons. So first of all, is if an ETF wants to be exposed to crypto, right now one of the only options they have is to invest in GBTC, Grayscale Bitcoin Trust. And this doesn't exactly mimic the price of Bitcoin, and a lot of these ETFs, they can't invest in Bitcoin because of regulations. Their only option was GBTC. But now you probably saw, but a lot of people are talking about all of these ETFs are going to be pouring billions of dollars into Coinbase, because if they want some sort of exposure to Bitcoin, you're right, they're probably just going to put money into Coinbase, because this is the largest crypto company out there, and this is a way that they can easily get exposure to the cryptocurrency market, to Bitcoin. And I think we're going to see a lot of ETFs, whether they're going to want to have at least a small percentage of their portfolio allocated to crypto. And I think this is a stock that's going to be the stock where a lot of people are going to turn to. So right now, Coinbase has about 56 million or so verified users. About 6 million are active every single month. That about $1.8 billion in revenue in the first quarter of 2021. And they grew almost 900% year over year from Q1 of 2020 to Q1 of 2022. To put how big Coinbase is into perspective, remember, Coinbase is like an exchange for cryptocurrencies. It's where you can buy and sell cryptocurrencies. Same thing as like the NASDAQ or New York Stock Exchange. And when you look at the value of the New York Stock Exchange, so the Intercontinental Exchange, which runs the New York Stock Exchange, currently has a market cap of $65 billion, and the NASDAQ has a market cap of $25 billion. So, the companies that, essentially, the company that runs an exchange, just like Coinbase. Coinbase has a market cap close to double that, at more than double the NASDAQ, but about 50% more than the New York Stock Exchange, and has a market cap of close to $100 billion. One point during the day when it IPO'd, it had a market cap of over $100 billion when the stock was over $400 per share. So, first of all, like I said, people think Coinbase, and I agree, is going to skyrocket because ETFs, if they want to fill that crypto position, they're going to fill it by investing in Coinbase. That's number one. Another thing is this is by far the biggest pure play in cryptocurrency space, and I think it's really going to legitimize Bitcoin, Ethereum, cryptocurrencies in general. Now we're seeing that one of the largest companies in the world is a cryptocurrency company. I think this is going to legitimize crypto in general, going to bring a lot more money into the space for people that might have been on the fence before, people who might have not been as sure. I think this is going to bring a lot of money into the space. And this could also open up the door to a Bitcoin ETF in the future. A lot of people have been talking about when will there be a Bitcoin ETF. GBTC, Grayscale Bitcoin Trust, has been looking to change from a trust to an ETF, but there's a lot of regulations, a lot of papers, a lot of hoops they have to jump through before this could happen. But a lot of people think with Coinbase now having its massive IPO, this can open up the door for a lot in the cryptocurrency space, and a lot of companies, even more so, a lot of crypto companies having an IPO because they saw the success with Coinbase. But speaking of successful companies that have had a lot of hype around them, Lucid Motors, new reports came out that they may start delivering the Lucid Air EV to the Middle East and other markets much, much sooner than previously expected. And this is because of 3 different reports that came out that really point to the fact that they're going to get these out a lot sooner than expected, making investors pretty happy about this. The first thing is that they have 3 new positions, 3 key job vacancies that suggest that they have a much more accelerated delivery time than what they used to have. So the 3 different positions are Manager EMEA Inbound Logistics, Manager EMEA Logistics Operations, and Manager EMEA Outbound Logistics. So essentially, this shows, and this is on their website, it points to the fact that they're going to be getting a lot more, they're going to be getting deliveries out a lot sooner than expected, or at least their timeline is looking much more promising than it did before. So if you look on the website, you click on that link, it says Manager Outbound Logistics for Europe, and this is a full-time job, and they said they're seeking a Manager EMEA Outbound Logistics. Position requires an experienced professional with the ability to program and manage logistics requirements to support finished vehicle distribution for EMEA. So this is a great sign. This is a great sign that the timeline, at least, is looking a lot shorter than what it used to be. So that's a great sign for Lucid Motors. Currently, 2021, they're expected to get their first vehicles rolled off the production line in the U.S., get those vehicles out to customers in the 3rd quarter of 2021 of this year. So that's a good sign. And now with this news, it looks like they're going to start to get worldwide even sooner than they originally expected. Currently, they have an agreement with Saudi Arabia where they have to build a factory there as well. So currently, they're building the factory in the U.S. They're going, according to contracts they've previously signed, they're going to have to build another one in Saudi Arabia. So that means, now it's looking like things are moving a lot faster than they originally expected in terms of deliveries in other countries, which is great news. In U.S., took a little longer. Originally supposed to be Q2 of 2021, but now it is Q3. Either way, though, things are looking a lot more promising in terms of a timeline for Lucid Motors, which is great. I don't know if you guys have seen, but Ark Invest, they've been speaking a lot about genomic stocks. ARKG is their genomics ETF, and that's ARKG. And also in their ARKK, their flagship fund, one of their largest holdings is also a genomics stock. So recently, an Ark Invest analyst came out on CNBC, and he spoke about 2 stocks in particular that are his and Ark Invest's absolute favorite with regards to genomics, healthcare, and just the genomic revolution in general. Which 2 stocks that they think are the top stocks, the best stocks to invest in this space if you had to pick 2 different ones. So right now, they explained how the first one, which they really like, which makes up a pretty large portion of their portfolio, is adaptive biotechnologies. And essentially, an analyst who focuses specifically on genomics for Ark Invest named Barnett. He joined Ark Invest in 2018, and he explained how adaptive biotechnologies has roughly about 1.5% weighting in ARKG. And recently, this company was granted by the U.S. Food and Drug Administration the use authorization for a COVID-19 test that helps to identify recent or prior coronavirus infections. And he explained how this is really interesting because the really interesting thing about Adaptive is that they combine their understanding of the human immune system, and by applying a lot of really sophisticated machine learning principles, they've actually been able to create a test that we think will be a platform for essentially all autoimmune diseases in the future. They're saying, so while the first good piece of news with this company, they had a recent approval by the FDA for emergency use authorization of a COVID-19 test. In addition to this, though, they're also working on machine learning combined with the human immune system to develop another test for any autoimmune disease in the future. And this represents billions of dollars in revenue because right now there's no other test like this out there. They explained how this is an example of where in a couple of years from now, there's going to be a new class of diagnostic tests that can be a sort of one and done, where they don't need to, physicians, hospitals don't need to keep on dozens of different types of tests to test for autoimmune diseases. They could do one test and test for everything. So that is what they do. Basically, they have been growing significantly in terms of, different drugs they've gotten approved and all the research and development they're doing. Second stock that he says that Ark Invest really, really likes is it makes up a large portion of ARKG and a large portion of ARKK, and that is Invitae. So Invitae makes up 2.08% of ARKG and 2.37% of ARKK. And essentially they said that Invitae is really at the center of combining all of these things together, of combining next-gen sequencing, lab automation, artificial intelligence, and neural networks. They're at the center of all of this, and aggregating all of the world's genomic and genetic information, truly transform genetics and make it as common as cholesterol test or going in for a physical. So they're very excited about this company. They're in the gene editing space, similar to a company like CRISPR. They're in the same sort of space, not exactly, but similar sort of spaces. And these are companies that Ark Invest really, really loves. They think have a ton of potential because you got to remember, health, medicine, healthcare industry never ever gonna go away. This industry is gonna be here forever, and they think that these two companies are gonna be the leaders of it in the next generation of healthcare, and they think they're gonna drive and accelerate these stocks over the next couple of years and this sector as a whole. They're gonna bring the entire sector up. Now, you've probably seen this story of GameStop, right? Yeah, so the last couple of weeks have not been the best for GameStop. I know we've spoken about it a lot, but last couple of weeks have been the longest losing streak for the stock in over a year. In the last year, since the start of the pandemic, it was at about $3 a share at one point, slowly crept its way up to about $8 or $9, and then it exploded to over $400 a share in January. But now, since about the end of February, February 27th, around there, GameStop, stock ticker symbol GME, has had its longest losing streak in the last year. Currently, it's bounced back a little bit the last couple of days. It was up over, I believe, 20% in a single day this past week. But still, a lot of people are getting concerned because a couple of different reasons. So first of all, GameStop is making main reason is this stock skyrocketed with the massive short squeeze, everything going on with Wall Street bets. That's the first reason. So a lot of people think, it's going to come crashing down at some point. The second reason, so that's the most obvious one. The second reason is that GameStop has been making a lot of changes to the C-level executives, to the company in general, and they're in a very, very large transitioning period right now. So recently, they've come out and spoken about hiring a new chief growth officer, a new chief technology officer, a new chief operating officer. All these people were from Amazon. They also hired major new positions to help transition the business from a retail, like a brick and mortar business, into a technology e-commerce business by hiring people from Walmart, people who built the app at Walmart, and other major technology companies they brought people on from. So that's one thing. Another thing is that recently, a lot of people in Wall Street Bets have been starting to turn away from GameStop, looking more at AMC, some smaller stocks, and things like that. Because while GameStop was the main driver of this entire short squeeze, now it's priced, pretty high per share, over $160 per share. And some people they can't afford that. They want to look for smaller, like lower price stocks, maybe stocks that are around $3 a share or $10 a share, something around there. And so right now, a lot of people are getting a little bit concerned about GameStop. Where's it going to go? My opinion, long term, I think they're at a very key inflection point right now. Not in terms of stock price, but just in terms of the business in general. They've made a lot of new hires, made a lot of changes to the structure of the business, and this is something they have to do in order to succeed. They have to transfer from a brick and mortar to an e-commerce, solely digital business. And the only way they're going to do that is making those big changes. But we're still at a very key moment in time because we don't know if all these changes are going to pay off or if it's going to end up failing. So either way, right now, no analyst has a buy rating on the stock. The stock has 5 sell ratings and 2 hold ratings, but 0 buy ratings. So right now the average analyst price is $46 a share. Really, I don't know where it's impossible to tell where the stock price is going to go. There could be a large influx of people from Wall Street Bets coming in again. But either way, if you're looking at this long term, what I would do is right now they're at a very key moment. They can transform their business and be a massive, massive company in the future if they're able to transition and be the Amazon of gaming, similar to what Chewy has done, where Chewy is the Amazon of pet products. So if they're able to do this successfully, I think then that is when you can start looking at the stock being like, okay, this has a long-term potential. Right now, it's just too up in the air to really know. But speaking of GameStop making changes, the biggest change they ever have made up to date with everything going on, the biggest change is that right now GameStop initiates a search for a new CEO. They've already changed their chief growth officer. They've already changed their chief technology officer, their chief operating officer. They've already made major changes to basically all the C-level executives and a number of other positions at the company. They've brought people on from Chewy. They've brought people on from Amazon, from Walmart. They've tried to bring on people who have a lot of experience in the technology space. And right now, George Sherman is the CEO of GameStop, and ever since Ryan Cohn came on, who was the founder of Chewy, now they're starting to look at, okay, who's going to be the next person to really bring us, transform the business and bring us back, so we're actually a growing company that has a lot of potential in the future. The problem is, Sherman has been able to navigate the pandemic. He's done extremely well. The problem is that he doesn't have a lot of experience in e-commerce and technology, and they're looking for someone who can do that. They've already, got a whole new C-level executive team. All of these people have experience with tech, e-commerce, but the CEO, probably the most important person at GameStop right now, currently does not have that experience. So this guy, Sherman, has about 25 years of experience in brick and mortar retailers, such as Advanced Auto Parts and Home Depot. But now they're starting to look for a new CEO that potentially would have a lot of experience in technology, e-commerce, and those areas. So I'll make sure to keep you guys updated on that. But that is a really big development for GameStop because they've already, hired a bunch of new people, but the CEO would really be the most important position that they're going to have to fill. And it'll be interesting to see who they select for this position. Other stocks that have been doing pretty well lately is Palantir. So Palantir, a lot of analysts are worried about the stock. They're saying that there's a lot of weaknesses because Palantir has a pretty large portion of their business solely dedicated to government contracts. Most of their revenue comes from government contracts. And recently we've had some insiders sell the stock as well. So some analysts are a little worried about this. They're like, what is going on? They can't just solely rely on government contracts. It's a little concerning that insiders are selling this. But in reality, I think a lot of this actually is actually great news for Palantir. And I think they're at a great, key turning point for the business where they're really starting to transition from having solely government contracts to having more commercial and institutions having more of those contracts. Also, at the same time, they changed their business model up within the last 3 months, where now it's not solely long-term contracts that really make it hard to get smaller companies. Now they changed their business model to be less reliant on having these large contracts where you pay tens of millions of dollars or, millions of dollars up front. Now they've really opened the door to more businesses, signing and doing business with Palantir. So right now, price target for Palantir from this analyst is between $102 a share to $145 a share. Currently, Palantir is sitting around $24, so that would be about a 4 to 5x return from where it's currently at. Right now, Palantir, they had a big demo day event the other day. They spoke about their Foundry software, what's that doing for commercial businesses and how they're improving on it, and just other aspects that people didn't know. It was a pretty good day, a pretty good demo day. They've explained a lot to investors because right now Palantir is a business that is very secretive, and that's why they started doing these demo days. But besides this, right now, a lot of people are saying that Palantir, some insider selling shares, is a bad thing. But according to this analyst, they're saying that share dilution is actually a good thing because the most important thing to look at is stock options and how these executives are compensated with stock. And they said even if they're selling some of their shares of the company, a lot of these insiders have huge tax liabilities that they have to pay off. So that's why they're selling it. But also, they're still paid tens of millions of dollars basically each year. The very high up executives in Palantir stock. So really, there's nothing to worry about there. And they're saying that the government contracts make up currently about 89% of their business. 89% of their business really comes from government contracts. But right now, that is really starting to go down significantly. They're growing their commercial portion of their business. They're signing on new people, and it's growing very, very rapidly. So between all of those things, analysts are giving the price target of about $105 to $150 a share, and they think that could materialize within the next 2 to 3 years, especially as Palantir continues to sign on more and more contracts with the U.S. government, with large businesses, and it's not like they don't have businesses, like large businesses under contract already. They have AWS, they have, I believe, I know they have like Amazon and AWS, and I also think they have IBM, but I'm not 100% sure about that. Next up is MP Materials. So MP Materials has been getting a lot of attention lately, and even more so recently with everything going on with Joe Biden, the infrastructure bill, with relations with China, with electric vehicle industry, and everything going on there. So a couple of key things with MP Materials is essentially betting that the supply chain, like the electric vehicle supply chain, is the best way to invest in this space. So rather than investing in a specific electric vehicle company or a specific, like one specific brand, they're saying, okay, look, by investing in MP Materials, you're essentially investing in the industry. Like, are there going to be more electric vehicles? If the answer is yes, well, then it doesn't matter if it's Tesla, if it's GM. It doesn't matter what the company is, because if you think the industry is going to grow, there's going to be more EVs, well, then MP Materials is going to have to supply more material, more rare earth magnets to supply all of these electric motors. It's that simple. So right now, the MP Materials is the largest miner of rare earth minerals in North America. Most of the companies right now that mine the specific magnets that's needed for all EVs is located in China, and all of it is currently still processed in China. So even though MP Materials mines the material in the US, they still have to send it off to Asia to be processed. Good news is that we're at a pretty soon, within the next 12 to 18 months, MP Materials is going to be able to process all of this material in the US in their own facilities. So that is a really key thing. because they'll be completely self-sufficient. They won't have to rely on sending anything to China or anything to Asia, and they can do everything in the U.S. And given, the shaky relations between the U.S. and China, there's always a little bit of shaky relations between U.S. and China. It'll be important that we have a U.S. company that can mine the material, process it, and, get it out to all of these EV companies, especially with what Joe Biden is planning on doing with the next infrastructure bill. Plan is to get, thousands of charging stations, thousands of EVs, and the only way you're going to be able to have more EVs is if you have more of this rare earth magnet from MP Materials. Another thing with MP is that currently they have their core asset is called Mountain Pass Mine. And this mine has about 800,000 tons of recoverable rare earth reserves at the mine, which is one of the largest in the world. And the thing is with this company is that they estimate about 8%, an average of 8% ore grade, which is much, much higher than other mines out there. So the quality of the mine is much higher than others out there. And it's the only U.S. company, and the electric vehicle space is continuing to grow. And Joe Biden's administration want to get more electric vehicles on the road, be a net zero carbon emission, country. So all of this combined is really pointing to MP Materials. And if you're betting on there being more EVs, well then betting on MP is like a no-brainer right now. Now on to China. So the Chinese digital yuan, China's digital currency, is already starting to be distributed in a two-tiered system, and it's starting to get in the hands of more and more consumers. So China has officially become the first major economy to roll out its digital yuan, its digital currency. And this currency will bypass the global financial system. It's going to be, it already is it's similar to like a cryptocurrency, but it is regulated by the Chinese government. So the People's Bank of China, PBOC, has introduced its first blockchain-powered digital currency controlled by its central bank. This has taken over 7 years to roll out, and now they're saying that the main goal of it is to gain more centralized control and replace some of the cash and coins in circulation. So with this new digital yuan, the way it's currently being rolled out is with like a lottery system. So thousands of people have already been chosen with this lottery system, and they're allowed to spend money in a lot of e-commerce stores, in-person stores. There's a select number of locations that can accept these already. Right now, like Starbucks, McDonald's, they've rushed to make sure they are some of the first companies that are able to accept this in China. And distributing it is going to be like a two-tiered system. So first, it's going to be dispensed to commercial banks, which will then be responsible for getting the currency into consumers' hands. So it's not just like the government is sending it directly to like a digital wallet. No, they're just sending it to banks, and banks are distributing it from there. They explained how this two-tier structure can avert disintermediation in the financial sector because the central bank will not be in competition with commercial banks. That's been a big issue that a lot of people have been worried about in the U.S. as well with a digital currency, that if they were to have their own digital currency, it may make the U.S. central bank be in competition with like JP Morgan and Chase or Bank of America or other banks out there. They're saying no, they're trying to work together, so it's not like that. And there's been a lot of support for the digital yuan and just digital currencies in general. And now a lot of people think that with this being rolled out in China, it's going to push the US to get theirs rolled out even sooner. Jerome Powell has spoken a lot about this already, and they think that now we're seeing China already roll theirs out. We'll probably see the US follow pretty soon. Now on to Tesla. So Tesla just recently came out and they hiked up the price 30 to 50% on their solar roofs on contracts that were already signed a year ago that have already been agreed to. Now they've upped the price 30 to 50%, and they're saying if people don't like it, well, they can just get out of the contract and Tesla will refund them. But the problem with this is that a lot of these customers have said they've already spent thousands of dollars to prepare for their solar roof. And Now that they, for their Tesla solar roof, they spent thousands of dollars in like other maintenance costs to prepare for it, and they can't get those back. So, for example, one person, they said that originally they were quoted at $77,000 for the roof. They'd already agreed to it, and Tesla sent out an inspector in March who confirmed that everything looked fine. The price, everything looked fine. It didn't look like it was an unusual situation. Their roof looked pretty standard, and that's what they said. But now, when this customer went back onto the Tesla website after this announcement, the system price is now up to $118,000, which is about 50% more than what it was at before, and a lot of customers are not happy about this at all. There's already been a lot of delays, and people have had these under contract and signed agreements for years now. Another thing on top of this is that even though they've increased the price, now in terms of who's going to get their solar roof first, they said whoever's logged on to, sign the new agreement, that's how they're going to be rolling this out. They said, we'll be prioritizing customers based on the order in which they accept their updated agreement. So that's not fair to the people who might have signed it over a year ago versus people who might have signed it 6 months ago, because now it's like everyone was brought back to zero, and whoever got on there first to sign it, they're going to be top priority. So a lot of drama here. I'll make sure to keep you guys updated, but they did increase the price significantly. They said it had to do with, roofs having... some of them having more difficulty than other in installing, because each roof has its own unique, design, and it's not all the same. So some of them are more complicated, but a lot of these people, they have pretty standard roofs, and they're seeing large increases. So is it either material costs? Is there something going on with Tesla? We don't know the whole story behind it, but all we know is that a lot of customers are not happy, because going from, let's say, $70,000 to $110,000 for the solar roof, that's a big jump. So keep you updated on what happens here. But speaking of stocks that have been doing extremely well, I don't know if you've seen, but FuboTv has signed a lot of major partnerships recently with Marquee Sports, which is a sporting network in, I believe, Chicago. And then they also signed another agreement for Qatar and World Cup qualifier matches to have over 70 of those streaming on the platform. So right now, FuboTV, they recorded about $100 million in revenue in the last quarter that they announced, and they currently have about two different lines of their business. So the first is the subscription, which makes up about 89% of revenue, and advertising, which grew at a whopping 157% year over year. But right now, a lot of people are saying that FuboTV could be the Netflix of live sports, and they could be even more than that because of all of the opportunities with sports betting. So right now, analysts are giving FuboTV a price target. They say bull case could be $200 per share. And they're saying that FuboTV could skyrocket over, it could basically 10x from where it currently is, because of a couple of key reasons. So the first is they signed these two major agreements recently, but they're saying really where the value comes in for FuboTV long term is going to be with sports betting, integrating sports betting into live TV. So they say, look at it. Right now, the important part about FuboTV, the most important thing for them is getting more and more live sports, more games on their platform. But now once they start to get that, the next big step is going to be getting sports betting integrated into the platform. So they said, long term, the situation that you could imagine with FuboTV would be that in a couple of years from now, maybe you're watching a game, let's say basketball, and then you could bet you and your friend could bet whether or not you think someone's going to make a free throw. You could say, I bet $5 this person's going to make a free throw. You each place a bet on FuboTV, watching the game, place the bet, and then if they make the free throw, you could get money from it. So they said, really, long term, it's going to be integrating micro events and small events during a game into sports betting. So like individual things, like whether you think someone's going to catch a pass, whether you think someone's going to make a free throw, and you could do that in like live in real time. So I said that's where the future lies for FuboTv and sports betting. But right now, important that they're continuing to sign major agreements like they've already signed, continue to get more and more of those on, and then long term get sports betting integrated into all of these live matches. So right now, there's a lot of potential for this stock. Analysts say bull case could be $200 per share, but that's really all I got for you guys today. Hope you enjoyed today's episode, and if you did, please be sure to like it and leave a comment down below. But hope you enjoyed. Don't forget to get your 4 free stocks, each valued up to $1,600, when you download the Wrubel investing app using the link down below. I hope you enjoyed, and I'll see you guys in the next episode.